And many of our peers, though, are selling. But then you have Michael Saylor buying 900 Bitcoin a day. So, miners don't really, the amount of Bitcoin miners sell from new production daily has very little impact. It's a different story if a miner like ourselves, sitting on approaching 50,000 Bitcoin, if we decide to sell 20,000 Bitcoin, yeah, that would move the market, definitely.
Yeah, and that's exactly what I've been saying, right? Like the effect of newly minted Bitcoin on price, i.e. miners' daily operations, has much less of an effect on Bitcoin now than it did before. We have an interview here. It's a little long, but we're going to take a look at it. And it's Bitcoin cycle like we've never seen. What's next for price, mining cost, and marathons. Fred Thiel is going to be talking to us. So let's go ahead, get into it. Let me know if you guys can hear it okay. If not, and then we'll go from there.
Time the wind blows and those miners can run, we're generating Bitcoin at near zero cost. We're still doing a full hodl. And many of our peers, though, are selling. But then you have Michael Saylor buying 900 Bitcoin a day. So, miners don't really, the amount of Bitcoin miners sell from new production daily has very little impact. It's a different story if a miner like ourselves, sitting on approaching 50,000 Bitcoin, if we decide to sell 20,000 Bitcoin, yeah, that would move the market, definitely.
Yeah, and that's exactly what I've been saying, right? Like the effect of newly minted Bitcoin on price, i.e. miners' daily operations, has much less of an effect on Bitcoin now than it did before.
Fred Thiel returns to the show. He is the CEO of Marathon Digital Holdings, one of the largest Bitcoin miners in America, if not the world. I'm David Lin.
Bonnie Chang.
And we're here to discuss Fred's outlook for the entire Bitcoin space, including mining. An honor to host you, Fred. It's very rare we have the opportunity to talk to a very large miner like yourself, so thank you for joining the program.
Great to be here.
Thanks for watching, Mining Meister.
Follow up on the conversation we had last time on the show. I mean, Bitcoin was at an all-time high then. It's at a new all-time high now. The strategic reserve is now signed to executive action. What is the next catalyst for the new all-time high that's coming up next, inevitably, hopefully?
Well, I think a couple of things. For one thing, we're seeing all these Bitcoin treasury companies being created.
Yeah.
So where Michael Saylor before was kind of the person in town buying 900 Bitcoin a day, per his own admissions, you now have the Trump family, you have Cantor Fitzgerald together with Tether, and you have many other
Trump families is called World Liberty Fund,
who all are raising multi-billions of dollars, who are going to be in the market competing with Michael Saylor to buy Bitcoin, which is essentially going to drive number go up, I think, for a period of time. Stablecoin legislation passing through Congress and landing on the president's desk, I think is going to be another small leg up. Then you have market structure soon behind that. And then you have the strategic Bitcoin reserve coming as number 3. The SBR right now, based on what I understand from the White House, the SBR is now, they'll be receiving reports from all the government departments, so Treasury, et cetera, on how much Bitcoin the government actually holds. More than likely, it'll be a number in the 100,000 range, because you have to think of forfeiture laws. And while the FBI or IRS may have confiscated Bitcoin, it may not be theirs to actually hold. There may be a victim that they have to deliver it to. And so you most probably have about 100,000 Bitcoin that they have. The question is then, what is...
Isn't it weird that the IRS can confiscate your Bitcoin and then just keep it and hold it? Sounds like theft.
The administration going to do to add to it? And what revenue neutral programs are they going to do that? And I think the U.S. Needs to move quickly, because you now have other nation states wanting to do Bitcoin strategic reserves. And if they start buying Bitcoin ahead of the U.S., then it's kind of, well, the U.S., you guys were first, but you haven't done anything about it. And so I think when the U.S. announces they're actually buying or adding to the Bitcoin reserve, that'll be another catalyst. So you have a multitude of steps. You're seeing some great inflows into ETFs right now, which is primarily retail. But you're also starting to see more and more institutional buying. There's a definite, I think you and I've talked about this before, there seems to be like a floor in the market where market comes down, there's always a buyer at some point.
What's the floor now?
Right now, I think there's very strong support at 98. We're building support at 106. And, we hit 110, we bounced down to 108. We hit 110 a little bit more, we bounced down to 108. So I think 106 is pretty good support. And a backstop to that is 98.
So 450 new Bitcoins are mined every single day, but all the people or companies or governments that are trying to buy Bitcoin sounds like they're trying to buy a lot. But Bitcoin price does not really reflect on the type of demand that we are talking about. Why?
So you're seeing long-term holders, and this is a phenomenon that happens always. When you have 98% of Bitcoin in profit, then what you end up having is people start selling. The long-term holders at this stage in the market cycle typically sell a portion of their Bitcoin with a plan of buying it back when Bitcoin drops again. I don't think we're in a...
And this is something that, and obviously, like, it's something that really I've been trying to talk about in regard to kaspa, right? Because Bitcoin's been around for a long time. And so having a majority of the Bitcoin supply in circulation when there's already a market for it is not as impactful. Once you lose the block reward, right? But if you look at like kaspa and one of the fears surrounding that, right, is that effectively the emissions are so fast and adoption's not as fast, right? So it all comes down to like, you have to either speed up. It's always a game of either speeding up adoption or slowing down emissions, right? And that's just basic economics of blockchain, right? Is you have well, and that's in proof of work. Right. So I guess you do have the other option, right, which is moving to proof of stake and incentivizing people to lock up their holdings. Right. So like what Flux is doing right now.
A cycle like we've ever seen before. And so I would love for them to be proven wrong and then have to come into the market again while Bitcoin is rallying at 120, 130. So I think it's a different market today than what they're used to seeing. But when you have this much Bitcoin in profit, people feel, okay, maybe I should sell a little, take some chips off the table, and buy on the dip when it comes back down. We'll see.
Is a dip going to be lower than 100K?
It's hard to tell. Bitcoin price is very much driven by a number of factors. On the one hand, you have global liquidity, M2 money supply, especially the asset side of that. And if you have a lot of government spending going on, a lot of liquidity coming to the market, I mean, the China Central Bank, globally, every country is starting to issue more debt. It's not just the US, and so global liquidity is growing rapidly. Bitcoin tends to lag M2 by about 90 days, typically. But you have these little foibles, like Trump could decide on a new tariff policy, and then you'll see the market drop, or he may remove tariffs altogether and the market will go up. So you have these, I call it policy changes that can affect the price of Bitcoin. You have also portfolio adjustments, right? Where you have people
not
who
long
have
run, but short
been,
term.
In equities who now sell equities, go into bond portfolios, and as they re-level set their portfolios, what ends up happening is, Bitcoin is an allocation of their portfolio, and if they decide they're going to rebalance to or from Bitcoin, or they're just liquidating a certain portion to go into cash because they want to go in and buy something else, then they'll liquidate across their portfolio potentially. And so those are the things that drive these dips. The big dips, the 20% dips, those are more macro.
Yeah.
The Fed decides that we're not going to cut interest rates at all. You'll see a $10,000 drop in Bitcoin on something like that.
But that's
so
all
very much
short term. So when she asked, will it go back down below 100K? I think we still have the effects of the halving cycle to an extent. And I think we will see, I know this whole argument is like, we won't see that bear market, but I have to assume that we're still going to see a portion of that cycle because we saw a portion of it on the uptick, right? And I don't think we're far enough away from the previous cycle's all-time high to say that we don't go back down to like 60K or something.
No, unfortunately. But I think over time...
Not like... We still have like what, a year before that's even potentially beginning to happen though?
There's just so much more demand than supply. And, as the number keeps edging its way up, you think about last year, we went through this period where we were kind of moving sideways for a long period of time. And then there was a dip and then boop, bounce up. And then now we were up at a new level, right? And think about it. July of last year, we were bouncing in the $50,000 range. And then all of a sudden it was 70, and then all of a sudden it was 90, right? And then we were at 100 just after Election Day. So I think we're going to see that type of volatility continue. But what's interesting is that you look at the volatility curve, and we're really starting to see a flattening on a logarithmic scale of the volatility curve of Bitcoin. And if you look at the power law and you look at some of these other methods people use for evaluating Bitcoin price, I think what you're going to see is that...
Do you guys believe in the power law?
The volatility in Bitcoin is starting to diminish. Don't know what that does to its attractiveness in the market anymore.
I think it was good until now. I
stable
think it doesn't
Bitcoin
work
becomes,
anymore.
The more like gold it starts behaving, and the more like gold it will become.
In what sense?
Gold is historically a very stable asset. It doesn't move up and down very much until recently, when you saw nation states buying gold because they don't want to hold treasuries, they don't want to hold dollar-denominated assets, and they're viewing gold as a better reserve asset. People are starting to view Bitcoin as a very good reserve asset if Bitcoin's volatility decreases, right? No nation state wants to have to go to report that, well, we have a $500 billion in Bitcoin and there was a 15% drop in the price of Bitcoin, and so we just lost all this.
It doesn't hold true anymore because the influence of the price has shifted. I think I talked about it not too long ago. We can get into it, but effectively, because there was also I never really even looked into the power law until KASPA started saying that they were the only other crypto to adhere to the power law. And then I was curious because I needed to understand what that meant. And so let's pull that up. We'll just do it. It's fine. We're just chilling now. I got my rants out. So let's go ahead and Bitcoin power law. So let's go look at it. Do they have the definition? All right. So power law model has evolved now into a full theory of Bitcoin behavior. Oh, they did a video. All right, here we go. Theory is a mathematical expression based on logic, physics, and mathematics of feedback loop below. Initially, Bitcoin needed to be accepted and adopted by the first users in the Satoshi circle. The value, now the price, can be checked 24/7 online, increased with the square of the users. The empirically measured value is more like 1.95, but we round all the following power numbers to their integer number for simplicity. This is a confirmation of the theoretical result called the Metcalfe law. The price increase brings in more resources, in particular mining power and capabilities, and this is the problem that I disagree. We'll get into it. So the increase in price decreases the time to mine a block, but because of the difficulty adjustment, the hash rate necessary to mine a block is changed iteratively. Because the mining is barely profitable, the compensation mechanism needs users to be proportional to the increase in price that is increased by the users. So the power law effectively is based off of the behavior of effectively saying that miners influence the price. So my primary counter to that is I think that miners no longer influence the price as much, as evidenced by the current cycle. And that is because the cost to mint a Bitcoin right now is so dangerously close to the price of Bitcoin that we're not seeing the revenue for Bitcoin miners that would indicate that this process still has an influence on price, because a majority of the currency is in circulation, right? Once the majority of the currency is in circulation, we default back to traditional supply and demand economics.
Right, a politician would lose their
I think I summarized that good enough.
job if there was a 15% drop in their reserve assets. But if you're sitting on $500 billion of gold and it moves 0.2%, nobody's going to worry about it. And I think as Bitcoin's volatility decreases.
And the other argument that I have there is once we run out of block rewards, miners are dependent on fees. And because we have presented Bitcoin as a store of value, there will be no use of Bitcoin in the general public, therefore not generating any fees. And the influence of the power law diminishes completely.
And it adopts more of a traditional commodity asset type curve.
But that's a very long-term view.
Potentially, yeah. But we're already starting to see it. Just, look at the logarithmic power law curve, and you'll see kind of it's starting to flatten.
There's this narrative that retails believe miners have the power to control Bitcoin price, especially
not anymore.
Around halving, because if you don't sell your Bitcoin, then, the supply and demand, nobody's able to buy more. How do you comment to that? Is it true?
No. If you go back 2 halvings, yes. Right? Because the amount of Bitcoin per block.
My definition, so Tant says there is proof of stake without locking. And my definition of proof of stake is that it doesn't require locking. While basically nodes, which I guess now are being called effectively proof of useful work, do require locking. That's the distinction, right?
Was significant. And miners were really not in a hodl mode, and then they were selling, and then some of them would hodl. For most of 2024, all miners were in a full hodl. Now in 2025, you're seeing most miners actually selling.
Wildly says, makes sense, though I can't fully understand. It's just hard for me to argue against it at this point, as to this point it's tracking closely. So for me, somewhat innocent till proven guilty. So yeah, so I've been doing this long enough to start to see the signs of it breaking away, right? To where what I'm saying is like, currently power law is holding up, but it begins to diminish as the control of price moves into the hands of the public, because Bitcoin will then lose its intrinsic value, which is based off of the cost to mint, right? So we'll go back to this again. I talked about it at the beginning of the podcast, but Bitcoin's price has value based on the cost to mint or to generate a Bitcoin or BTC in a block. As the cost basis to mint a Bitcoin is diminished by the non-use of it, right? Only paper use, you lose the intrinsic value of Bitcoin, which was energy in the past, or the energy used in the past to mint the Bitcoin. Its value diminishes over time, right?
Their Bitcoin. I realize there's only 450 new Bitcoin issued a day.
You have not made money mining anything in the past 2 years, only if you had 5 cents a kilowatt hour. I don't think that's true. You made money mining Bitcoin, kaspa. You can even make money mining right now. And spec mining.
So that's not a lot. We're still doing a full hodl. And many of our peers, though, are selling. But then you have Michael Saylor buying 900 Bitcoin a day. So, miners don't really, the amount of Bitcoin miners sell from new production daily has very little impact. It's a different story if a miner like ourselves, sitting on approaching 50,000 Bitcoin, if we decide to sell 20,000 Bitcoin, yeah, that would move the market, definitely. We have no intention of doing that.
If you shift the cost from what the cost of the utility is to hydro or solar, you just shift it from expense to capital expenditure. That's where you shift the value of Bitcoin, right? But as you shift to the value of Bitcoin to capital expenditure, you diminish the power law too, right?
Would you say then your stock should perform like a Bitcoin treasury company?
It does, actually, which is a bad thing because we're a Bitcoin mining company and we're not getting value for the Bitcoin mining business. Our stock, up until very recently,
let me rewind.
has been traded. Actually, miners sell from new production daily.
I'm reading chat and listening, so maybe I missed
story
that.
If a miner like ourselves, sitting on approaching 50,000.
Where did she say it?
Perform like a Bitcoin treasury company.
It does, actually.
I don't know. I missed that
Which is a
question. I
bad
don't know
thing
where it
because
was.
we're a Bitcoin mining company and we're not getting value for the Bitcoin mining business. Our stock, up until very recently.
Well, the whole idea, right, Tyler, has been surrounding Bitcoin that it's a supply and demand issue. My argument is that the demand isn't there without use, right? So effectively, my argument is that when Bitcoin stops being utilized, then it loses its use. Like gold still has use, right? And so if it loses its use case, then it loses its value potentially. Now, will that happen? I don't know. But I do know that if we look at transactions on the network, they're extremely low right now, and especially for the time in the cycle we're at.
Recently has been trading a little over 1 times NAV of our Bitcoin holdings, which means that our mining business is not getting any credit. We're now starting to see a shift in that. For example, it's starting.
Was it here?
There's this narrative that retails believe miners have the power to control Bitcoin
like after
price,
this,
especially around halving, because if you don't sell your Bitcoin, then the supply and demand, nobody's able to buy more. How do you comment to that? Is it true?
Yeah, we already talked about this.
If you go back 2 halvings, yes, right, because the amount of Bitcoin per block was significant, and miners were really not in a hodl mode, and then they were selling, and then some of them would hodl. For most of 2024, all miners were in a full hodl. Now in 2025, you're seeing most miners actually selling their Bitcoin. Now realize there's only 450 new Bitcoin issued a day. So that's not a lot. We're still doing a full hodl. And many of our peers, though, are selling. But then you have Michael Saylor buying 900 Bitcoin a day. So
yeah, we already heard this part.
Really
Never mind. I know what you're talking about.
A little bit how strategy is going about raising capital today.
I was thinking you were asking the question, which is, if everybody owned, at the end of the day, let's say there's no block rewards being mined, nobody using the network, and nobody's selling, because nobody's selling, the price of Bitcoin has no basis then.
They're issuing preferred instruments that have dividend payments on them. You saw the Trump family convert that they issued today is fully secured. It's not an unsecured convert. And so that's secured by the family assets, the real estate assets. So,
well, with any asset class, so the weekly rant says, I think the market is about to crash. Personally, it's unsustainable and people only want to cash out. And that's due to the failing economy, right? The fact is, and I've said this so many times before, but revenue matters over price, because the fact of the matter is, is you can't hold on to something when you need it, right? So you can't hold on to your one Bitcoin when, grandma's in the hospital and you got to find her a nursing home, or dad's, sick and on disability, or the price of milk goes to $4 a gallon. Like, it's not viable. So and what we're witnessing at the end of the day is the price suppression this cycle from Bitcoin is heavily due to the fact that the economic well-being of people that are holding it is not good. And all that does is further prove my theory that the miners don't have influence over the price anymore.
I think the market is starting to price in more risk into these deals, and it's getting harder. And the challenge is that if you have large dividend payments, large demands on liquidity, you can only continue, if you would, by selling equity in the company or finding some other way of funding those dividends.
What do you think caused the price suppression of Mara stock, as well as some other miners year to date relative to Bitcoin?
I think that's very driven by the AI story, or the lack of an AI story around certain miner stocks. If you look at miners like Cypher, for example, they had very positive swing in the beginning where there was a lot of optimism about their ability to get an AI customer. They haven't been able to find an AI customer, and so then the stock started dipping down. CleanSpark and Mara have been viewed as kind of quasi-mining pure plays.
Hey, Alex, I shake the right leg, but sometimes the left leg. I keep moving because it stops the AS from hurting. And I never knew why I did it for a long time, and then now I know. I move a lot, though, yeah.
CleanSpark, yes. Mara, less so, because we also have a technology business. We also are beginning.
Kielbasa says, I mine and sell 4,999 crypto a month and use it to pay a $5,000 electric bill at 10 cents a kilowatt hour. I mean, I'm with you, dude. That's the whole thing, too, is like it comes to a point of not being viable after a certain extent. And you can't compete at the scale, right? So one of the things that, Bitcoin or crypto in general kind of promised to do was to level the playing field. And while it did for a little bit, it turned out to be like any other industry where once big industry and economies of scale come into play, nobody can compete. And the money still, all the Bitcoin filters to the top 1%, right? Because you just don't have the capability to invest at the scale to drive your cost to a competitive level.
To work with inference at the edge. Our model, unlike many of the other miners, is we don't want to be an AI hosting company. We don't want to build powered shells.
That's a good price, Ozzy.
Provide GPU as a service.
Eventually, it won't be low enough,
space.
Right?
We're very focused on providing.
I mean, that's kind of like the problem
at the edge
right now
as a fully managed service, and I think that's the area where the margins and the long-term revenue streams are much more attractive. It's a lot more like Bitcoin mining in some ways, but it also is, you're not dependent on a single or multiple hosting customers to really drive your revenues. And it's a lot less risk from our perspective.
A year ago in one of the interviews, you said Mara is a capital allocator. What does that mean?
Well, think of our name, Mara Holdings. I have a background, other than being an entrepreneur, in private equity, and it really comes down to how you allocate capital. And so when we look at what we're going to invest in, we're constantly weighing, should I spend $500 million in building a new mining site, or should I spend $500 million buying Bitcoin? Last year, we spent a little over $2 billion buying Bitcoin. Why? Well, because the middle of last year, we felt Bitcoin price was going to move very rapidly upwards. And if you look at the investment horizon of building a Bitcoin mining site, it takes you about 12 months.
I always find it like interesting too when people are like, and then we bought a lot of Bitcoin and then price went up. But to a certain extent, it's another thing of like economies of scale. Like if you're buying at that scale, isn't that just a self-fulfilling prophecy at the end of the day? It's like if like a small crypto debt, or like it's like all the cryptos on pump.fun, right? They release a token, the dev buys it up, and because the dev bought it up, the price went up. It's just a self-fulfilling prophecy. It's not like a smart play or realization or anything like that, or it's not like the capability of them to invest and influence price compared to your ability to invest and influence price are completely different, right? And so when you listen to extremely, and I found this too, because I've fallen for it a lot. Like when you listen to extremely wealthy or successful people and their advice, you have to take into account the fact that their position came at a different time, and their success came in a different form, and that their perception of that will be that that's always the correct way to do it, when in fact it may not be, right? And that's when you get disruption. So then you have to have, like, we're at the point now where to get into Bitcoin mining, you would have to be extremely disruptive, right? And I think like the disruption is going to effectively be, unfortunately, it's not going to be, I don't think it'll be like new people or middle income people or anything like that. I think the disruption for Bitcoin will come into play when power companies and co-ops get in to the game.
But until you produce your first Bitcoin. And then it's going to take
power generators, I should say,
24
actually,
months to pay back that capital.
Co-ops and companies still have to buy from generators.
If
so
you expect Bitcoin price
power
to
generators
move more rapidly in the short term, you're better off spending the money just buying Bitcoin, accreting the value in the upswing of that, and then either leveraging that Bitcoin, borrowing against it, or generating yield off it, and then using that funds for other things. And so we're constantly evaluating how we're investing, at the same time as we're constantly evaluating how we're raising capital. What's our average weighted cost of capital? Do we want to sell equity? Do we want to use convertible debt? Do we want to use debt on our assets? Do we want to use project financing?
Oh, it's always easier to make money when you have money too.
To Bitcoin
Ask me how I know.
Banks weren't open to it. That is now changing. And I think what we're going to see is the cost of capital for Bitcoin miners is going to come down. The other thing that we've done is we've now started being very focused on what we call near zero cost energy. So we bought a wind farm at the end of last year. At that wind farm, we have essentially zero marginal cost energy. Whenever the wind blows, that energy essentially is free because there's no input cost. There's no gas, there's no coal, there's no input fuel. We can take miners that we've already depreciated fully from a site, and we depreciate our miners over 3 years, and we can relocate those miners to the wind farm. They operate only when the wind blows. Mm-hmm. But what that means is that there is zero CapEx spend on the miners, there's zero depreciation on those miners, and there's zero cost for the electricity.
Yeah, but you have
every time the wind blows,
you still have he's very good. So you still have CapEx on the windmills, right? So you still do effectively have some CapEx. But I like you can always tell when these sea levels, they're really good at this type of thing where it's like, this is a great idea because of this, while ignoring the other portion, right?
And those miners can run. We're generating Bitcoin at near zero cost. Over time, as we retire more and more of our fleet, as we continue to upgrade it, we'll build a bigger and bigger percentage of our fleet that operates not 24 hours a day. It may operate only 5, 6, 7 hours a day. But because the energy is free and the miners have already been paid for, we don't need a payback in the same time period. And that makes us much more capital efficient. Because think about it, a large-scale miner who is grid attached, paying 4.5, 5 cents a kilowatt hour, they are
I suppose there is an expense for upkeep too, Alex. You're correct. But the bulk of the cost, and actually, I don't actually know with wind power, the bulk of the cost I would assume would be initial install, right? And then your maintenance costs are lower, but I don't know that to be exactly true. I would assume and maybe I doubt they like winterize and do all that though too. Like if they froze up, like I'm just thinking like if I was running it, like the issue in Texas where some of the windmills weren't winterized in the 2021 winter storm, it's like, if you're only doing it for Bitcoin, do you really even care? Just like let it go, like let it freeze up and we'll figure it out later.
Constantly having to upgrade their mining gears, buy the latest equipment that's most efficient. And then what do they do with their old miners? They can't run them at their same sites anymore. So they have to either sell them, somebody like us maybe, or they have to do something else with them. And so we believe that you're starting to see, and a great indication of this is, look at the price and the demand for S19, which is now 2 generations behind current top of the state-of-the-art miners. Huge demand in the market for them. Why would you want to buy a machine that's 2 generations old that has 30 joules per terahash efficiency when the current machines are at 15? Well, it has to be somebody who has near zero cost energy. Mm-hmm. So we believe that that is the strategy long-term that Bitcoin miners are going to have to follow. They're going to have near zero cost energy, and they're going to have to really stretch the life of these assets, because otherwise the CapEx spinning wheel you're on is just too hard.
It sounds like you have the infrastructure in place to become an AI data center or operate AI data center. Is that something you've considered?
So we're very focused on inference at the edge, which is different.
I already know his answer because I watched him at Consensus. I got to meet him too.
When people talk about AI data centers today, they're talking about learning. Learning is not something you get very well paid for. Once you've built a model and you then deploy the model, you deploy that model in a different data center where you then do inference. And you need a lot less compute to do inference because most of the compute goes into building the model. Now, hyperscalers like Amazon, Google, Meta, Microsoft, they operate large learning data centers that also do inference at the data center because they're doing their own proprietary data. Mm-hmm. Now you would think, well, the hyperscalers own all the market. It's not true. About 60% of data center capacity is still proprietary to the companies. Why? Because they don't want to let their data out of the house. JP Morgan does not let their trading data out into the public cloud. Mm-hmm. They do that all in private cloud. They do it in on-prem, near-prem sites. And when you look at inference AI, which is, if you look at the studies, most of the revenues from AI will come from inference. A lot of that inference is run on a factory floor. It's a system that controls the manufacturing system. It's running a model that is constantly optimizing how that factory is running and eking another little bit of efficiency out of that factory. And every night, the data from the day is uploaded into the cloud, a new model is generated, and it's downloaded to the factory, and they do inference at the site there. The military runs inference in the field. All this telemetry from drones that are coming in, from radar systems, goes into a data center that's sitting in a container out in the field. That's inference at the edge. And we think those are the markets where there are very good long-term revenue streams, where you can build very defensible moats, as opposed to competing with the Equinixes of the world and those types of companies.
So Mara does mining.
He didn't even bring it up here, but just like a little bit more background too. The infrastructure for AI is completely different than the infrastructure for mining in a bunch of different ways, but there is effectively, even from the physical configuration, where ASICs have a completely different rack and stack method, whereas you're going to use traditional like 4U servers probably, but you know, basically like typical 47U server racks in an AI data center. But on top of that, you significantly increase your data requirements. So your networking changes. You don't need a ton of data for Bitcoin mining. So you're going to need to upgrade all of your networking equipment, as well as account for redundancy and your maintenance costs go through the roof. If you look at like the amount of GPUs a lot of these models are burning through, right? It's constant GPU replacement, that sort of thing. So maybe a GPU mining farm has a better chance at making that move to AI, but I don't think Bitcoin mining does. And to follow that up, learning a little bit more here from him too was pretty cool, as far as understanding that while there is revenue in building the models currently, which requires a lot of high power compute initially, the eventual revenue that you are going to want to aim for in the AI space is running inference. So
Also AI. For Bitcoin companies,
all AI is
BTS,
Asian. Is
and
that
for
what you're
other
saying,
companies,
Be
they're
more?
ETS.
I'm confused.
How do investors look at Mara then? It's a lot of things.
Yeah, it's a good point. There are many people who are confused a little bit with what we do. We have those who are fans of our treasury company model. There are those who are fans of our Bitcoin mining model. And then there are fans of our technology business and what we're doing there, which is still a very nascent business. So how do you overcome that? Well, part of it is you have to communicate with the investment audience and educate them. Another thing is we potentially have to look at things like segment reporting. So separating our treasury business and the yield we generate off it, et cetera, from the Bitcoin mining business and how we report it, not physically, but just how we report it, so that we can talk to the different investors in different ways. You could potentially create a tracking stock for the treasury business versus the other. There are a lot of complex ways to do that, which I don't think necessarily makes sense today. But we view Bitcoin as the treasury asset we want to continue to hold. Right now we're producing quite a lot of Bitcoin every month and adding to our stockpile.
Starting to think
without having to go to the market and buy it. But if market conditions change and there's a very attractive opportunity,
earlier
to
theory
buy,
on the
we're fully
Trojan
prepared
horse
to go in and buy and take advantage of that.
And your cash
true.
flow comes from the technology company.
That is the long-term goal. Today, that's not enough. And so cash flow comes from the capital that we raise through issuing equity.
I see.
Do you think it makes sense to have a
Like,
national Bitcoin?
Honest question. Do you think that this is the direction in which the original white paper meant for Bitcoin to go, which is this hold it all as an asset path?
Point miner run by the government, now that we have a Bitcoin strategic reserve. If I were a government and I have a mandate, an executive order now to collect Bitcoin in a strategic reserve and perhaps even acquire some in the future, would it not make sense and just be cheaper to mine my own?
Great question. So 4 years ago at Mining Disrupt, I gave a presentation that mining companies would either become partners with energy companies or would be owned by energy companies, because Bitcoin miners don't produce energy. And therefore, they're always going to be paying somebody for that energy. I think we are within 2 years of a time where energy companies truly, on a global scale, become partners with Bitcoin miners. This is electrical energy companies. Because there is so much imbalance in the grids today. Look at what happened in Spain recently. There's so much renewable energy that is unprofitable. People have overbuilt renewable energy, especially in places like Europe, that there is a now growing acceptance for Bitcoin mining as a load balancing strategy for grids, similar to what you see in Texas. In Texas, it's not profitable today to build a peaker plant. It's not profitable today to build battery storage, because Bitcoin miners do such a good job at balancing the grid that you can't do arbitrage on grid energy in the same way. And so I think what you're going to see is the revenue neutral way for the government to generate.
I mean, the power co-op I work for doesn't do Bitcoin. They do battery storage. But we do decentralized battery storage. We do incentives on customer bills to install batteries and then give us access to it. And so we have ways to work around like the capital expenditures for that and such. And when looking at Bitcoin, most power companies and co-ops are still not really adopting that. Now, on the energy generation side, they are.
Bitcoin for the Bitcoin Strategic Reserve.
But even
could
not
be
as
to
much.
Use government energy assets, partner with Bitcoin miners and say, I will give you the energy for free. Let's split the Bitcoin. So it's not a national Bitcoin miner company.
You'll just be
it's
partnering
essentially
with utilities.
Public-private partnership. Not dissimilar to how the government does with government lands and oil exploration.
That's interesting.
Just on that note,
Well, in that case, if that happens, then you know what they're going to do. They're going to give the incentives to the power generators themselves. That's what will happen. There won't be like a private Bitcoin mining company outside of consulting and like infrastructure stand-up. The ownership of that will still be like under power generators, companies, and then partnering with the government, because that would be, there's already close ties there, right? So I don't know that, like, other than experience in building out the infrastructure and management, I don't know that they would need that.
if you ever were to have a surplus of energy from your wind farms, would you consider
need private
consider
companies.
selling that back to the grid and
Absolutely.
in a sense become a utility company
If
yourself?
we can't mine Bitcoin with it, we'll certainly monetize it by selling it to the grid.
You started with being a miner and then you pivot into the technology. Why?
I've been in the technology industry for 40 years. I have touched everything from super mini computers, PCs, semiconductors, internet, data comms, video games, digital ad tech, et cetera, et cetera, et cetera. I've invested in technology as both a VC and a private equity firm. And Bitcoin mining is an operational efficiency business. When we started mining Bitcoin back in 2017, we were an asset-light miner. We bought miners, rented hosting capacity, plugged in miners, and ran them. And we used that strategy because it was the most capital-efficient way of doing business. It allowed us to grow to be the biggest in the world. And at the end of 2023, we then started buying all of our hosting partners. And we ended up buying 65.
Yeah, I think, Alex, what will happen is they will, like, I think eventually, like, Bitcoin, like, it'll probably be containers, something easy to deploy and energize, right? Because they already got the switching, and all you got to do is throw the power over to it in the transformer. And I think you'll see basically, I think there'll be money in building the containers, building the miners, that sort of thing, and then deploying the miners. Like I envision probably like a company that does all that together for, power generators. And the power generators typically already have the real estate, obviously next to their generation. So they drop that. That will give them the advantage of not only being able to balance load, but also to suck up any lost energy in that first mile kind of energy loss section, right? So not dissimilar from what they do on natural gas. There is energy loss as well. So the closer to the generation, the more efficient you can make your generation.
5% of our hosting partners at less than it would have cost us to build the sites. And then in the end of 2024, we started buying energy assets and we started mining Bitcoin off of flare gas in oil fields. So we've become more and more of a vertically integrated on the operations side. Back in 2021.
And for the vertically integrated just means like from production to sales, you control all of that, right? So it just means like if you wanted to vertically integrate a pizza shop, you would have the dairy farm that creates the milk, and then you would have the factory that makes the cheese, and then you would also be able to make the pizza, right? Vertical integration means you own all points in the production up to the delivery to the customer.
Realized that we were too dependent, or let me back up for a second. There are three constraints in the Bitcoin mining business. We call them the 3 C's: capital, compute, and capacity. Capital is easy, right? Compute is rigs. And capacity is power and a place to put them. the miners. In 2021, the big constraint was compute. Bitmain had a strangle lock on the market, right? They were offering miners at $75.
I don't think that miners are going to make enough money for that to be more incentivized than balancing the load, Alex. So your assumption is that the price of Bitcoin, becomes parabolic and makes mining profitable like it has been in the previous cycles. I would say that is a lot less likely the case once again, because the shift into the current state of, holding it and most of it being in circulation and the lack of use of it means that the mining doesn't become profitable. And so it purely becomes a load balancing technology.
Per terahash. Realize today miners that are much more powerful are selling at $17, $18 a terahash. And it hasn't gotten any cheaper to make them. And so we believe that at that point, we needed to become technologically vertically integrated. And so we co-founded a company called Auradine, which is located in Silicon Valley, which today is the only US manufacturer of Bitcoin mining ASICs and has some of the most amazing technology available. And they are now selling Bitcoin miners, but not only miners, they are also selling chips to people who want to build their own miners. And so now today, Mara is becoming a miner manufacturer. We are building our own miners. Why? Because we can build miners specific to our needs and with certain performance characteristics that Bitmain and the others can't do. Why? Because they're not willing to. We were at one point Bitmain's largest customer in the world. We've bought very few miners from them recently. So we're very focused on building Auradine as a way to have a technological edge.
Part of that's also because they're buying used, right? Like that's what they're talking about. He's like, we're buying up S19s, which I guess is the explanation for the S19 price being stable currently, and deploying them at wind farms, right? So I don't think it's purely that they're building their own miners. Just to be clear, I think they're buying used a lot too.
We build our own liquid immersion technology. Why? Because we are of such scale today that we know exactly what we want and need. And why should I pay somebody else a margin for something that I can do myself? And so today we have some very leading edge.
It just goes completely opposite of the original white paper for Bitcoin. It's just more and more centralized in every aspect to capitalize on the profit, right? Like that's what you're hearing is vertical integration is just honestly is another term for centralization, just so you understand. And he's saying like that's obviously what makes their company valuable, and it does. And that is like the natural path for any, company or government, really. My argument would be is that eventually you will have governments doing this in conjunction with power companies because they'll get the same idea. Why should I pay a premium to have somebody build out the facilities for me and blah, 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 when I could just do it myself?
Based liquid immersion technology. And we have other technologies in our technology business, not just firmware, orchestration layer, our own pool. Our mining pool, for example, operates with a luck factor above 0, meaning we're positive luck over long-term periods.
What does that mean?
So statistically speaking, if you have 1% of global hash rate, you should earn 1% of the blocks. We earn a little bit more than that.
How?
Let's just say that when you make technology very efficient, you remove latencies from what you do, it lets you react faster. And
remember, I was talking to you guys about that so many years ago. Build your own pools on your own sites. You reduce the amount of latency, and therefore you have a bigger, higher potential of solving a block faster or submitting a block to the network, which means that you will win more. We've known about this for forever.
Think about this way, that Once a block has been solved, it may be solved in just under 10 minutes. Ideally, the Bitcoin blockchain, the network is constantly adjusting itself to hit the 10 minutes, which is why you have the difficulty increase.
It's not constantly. It adjusts every 2 weeks.
The difficulty only changes every 2 weeks.
Oh, okay. He got it. Never mind.
If you're very efficient, you can swap what your miners are doing from one block to another block if a block is near being solved and you don't think you will solve it.
Oh, I didn't know that. This is cool.
Learn
Game
something
theory.
every day. I only have one more question. Actually, it's Bonnie's question to Jack Mallers. You asked him about the
Yeah, then you get into like some fun stuff too, right? Weekly Rant being like minding your own transactions. And then, I mean, you could even get into like crazy stuff with like all the examples of like sandwiching and all that with Ethereum.
the theoretical possibility of altering the 21 million Bitcoin cap if institutions pressure. Anyway, I'll let you ask him this question if you want. It's a good question.
Okay. I asked Jack Mallers the other day this question about, in this wild imagination, we all know that, Bitcoin is decentralized. There's miner, there's nodes, of course, there's us. But let's say a country becomes super powerful and somehow they acquire over half of the miners, find a lot of, people that are running the nodes and try to change the 21 million cap. Is it possible?
It's not feasible. Is it possible? China at one point controlled over 80% of global hash rate. At the time of the ban, I think it was 71%. The US today is about 40% of global hash rate. It would have to be a government or a group of allies who could exert enough control through regulatory means on miners. In other words, either go with us or you're out of business or something similar. The challenge is the validators, right? There are 1 million plus validators out there who are all very libertarian and independent in their thinking. And, it's easy to set up a validation.
See OpenAI's new data center, Phantom?
It's not a whole Bitcoin mining center. It's a powerful enough PC with enough memory and hard drive, and you're up and running. It took so long just to get Taproot approved. You already had the block size wars, where 90+% of the miners were in agreement, and you still couldn't get it passed. So is it feasible? I think it's very difficult to have that happen. And I think the value of Bitcoin would drop so precipitously if it wasn't for the fact that it's a finite amount. If all of a sudden you said they're going to now be 210 million Bitcoin price would drop by a factor of 10 possibly.
Yeah, and I still cannot think of any reasons why anybody would do that, but that's just curiosity.
Well, sometimes you have to ask the orthogonal questions to spur thinking. So it's a good question.
The philosophers of our time are all Bitcoiners. I told Bonnie the other day. Fred, certainly lots of philosophy.
Cool. I'll link this video for you guys if you want to check it out. I think I didn't really learn anything other than on the AI side. I want to look into that more. I think generating revenue off the inference is an interesting idea, and I think he's correct. I think eventually all the compute we need for AI goes away after all the models are done, right? I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.